The S&P 500 is hitting new all-time highs right now, hitting over 7,000 on the index. Now, the reason why the market is pumping is a few. First of all, we have de-escalation in the region. So President Trump has announced a 10-day ceasefire between Lebanon and Israel that will begin 5 p.m. Eastern time today. So it has begun already. He has invited both presidents to the White House for negotiations. And as we can see, the market is enjoying this news. The market is pumping immensely. Also, if we look at the fear and greed index, the S&P 500 is currently showing the most amount of greed this entire year. So we can clearly see a strong market. Now, it's also powered by the AI boom. It's powered by companies like Microsoft and Google performing very well. And another reason is that the unemployment rate is actually low, and there's a lot of new jobs in the market. So total non-farm payroll employment increased by 178,000 in March. That means there's 178,000 new jobs in the US. So this is the report from the US Bureau of Labor. So we have good geopolitical news. We have new jobs coming on the market. And of course, we have an AI boom. And most importantly also is we have high inflation. Now, why does that mean that the market is pumping? Well, if inflation is high, people want to preserve the value of their money. What they do is they buy assets, such as stocks in this case, which will then go up, hopefully higher than the rate of inflation, thereby preserving the value of their money. Now, what does Bitcoin do as a result? Now, before we talk about Bitcoin, let's quickly mention this last point about the S&P 500, which is if we compare the S&P 500 to the M2 money supply, so we are comparing these two here, and we can see that we're currently at a peak, and this indicates a potential bubble. Now, why do we compare it? Well, when you compare it, it tells us how much of the total money supply is being bid into stocks. So basically, what proportion of the money supply is made up of stocks. And we can see right now that stocks are very high relative to the M2 money supply. And the last time it was this high is in the dot-com bubble of 2000. So it indicates that the stock market is a bit overinflated at the moment. Now, just a cautionary point to note. Now let's talk about Bitcoin. So Bitcoin is of course currently in a bear flag. We know that already. And the bear flag is right here. Let me draw it for you guys. This is the bear flag, which usually breaks down, right? And we had a bear flag before. This was the previous bear flag, which eventually did break down. Now, the target for us to look out for is $77,000 if we want to break to the upside. Let me explain to you why it's $77,000. Now look here. First of all, we're on the daily time frame, and the top range of our bear flag, the yellow line, is approximately $77,000. Now, if I zoom out a bit onto the weekly time frame for Bitcoin, we can see some multi-cycle support and resistance. So here we can see the last two cycles. This is the last cycle, 2021 was the peak at 69,000. This is the current cycle with 126,000 as the peak in October. Now, the white line that I drew is major resistance here and support, and now again resistance, spreading across the last 8 years. Now it is definitely a point to put attention towards. And if we zoom in on the daily, we can see that it co-aligns with our yellow top range of the bear flag at around about $77,000. Now I want to highlight that if Bitcoin trades a bit longer sideways, the target goes higher. This is because our the top range of our bear flag pattern is upward sloping. So while previously the target might be here, if we trade a bit more sideways, the target will be higher at a higher point. Just to keep in mind. However, in my opinion, we're still in a bearish movement. We're in a bear market, of course, and therefore I would not get overly excited if we go above $77,000. In my opinion, wait until we go further down and slowly dollar cost average into your positions until we eventually reach the bottom, the end of the bear market, and then continue to go up again. And I want to show this to you very quickly. I had drawn this, and what we can see here is a pattern. Look, the green lines is always from the bottom of the bear market to the top. We can see this every single time, and it always is 1,064 days. Now, the red area that I marked is from the top of the bull market to the bottom of the bear market, and it always lasts 364 days. Now, if we look at the current cycle, 364 days from the peak in October will bring us to approximately 5th of October. Now, let's assume end of September, beginning of October being statistically, and it has been the last 3 times like this, the bottom of the bear market. This means this is not the bottom. We're definitely, according to history, gonna go lower. And in my opinion, we can go up to around $50,000. Why $50,000? Let me explain. This is the orange line here. $50,000 has acted as resistance. It has acted as resistance here. And it is a psychological number at which people will start buying again, of course. Now, looking at crude oil. Crude oil is falling right now because of the de-escalation of tensions in the Middle East. So in my opinion, eventually crude oil will go back down to fair value levels. Now, what are the fair value levels for crude oil? I want to explain to you why I think they are approximately $70. Well, have a look at this. When I look at fair value, I look at the long-term contracts. So these are option contracts that are being traded. A company will go into an option contract to secure a future price in oil. For example, a company that uses a lot of oil in its manufacturing will say, okay, I will guarantee myself to be able to buy oil from you in 1 year's time for $70 per barrel. Because if we have fluctuations like this will disrupt their operations and increase their costs of production by a lot. So therefore these options exist. Now, looking at options priced into the future gives us a good idea of the fair value of an asset. For example, here we can see the contract ending date. So this means basically how close it is to the current date. The further away it is, usually the price is lower. The price is more of the real value of the asset because there's less fluctuation. So if we zoom out a bit, we can see that most of these future contracts are clustered around $70 to $75 in the future. And that gives me a good idea and gives us a hint that we are most likely gonna go back to these levels. I mean, if we zoom out a bit here, we can see that the price around about here, $60 to $70, $75, was also the price we've been trading on before. Now, final 2 things for this video. President Trump has said that interest rates will likely drop once the new Federal Reserve Chairman, Kevin Warsh, comes into office. Now, we know that Trump does not like Jerome Powell, or at least he does not like his policies of high interest rates. Trump wants low interest rates. Low interest rates mean that borrowing becomes cheaper. This will stimulate the economy as more money comes into circulation, benefiting businesses of all sorts. Now, what I think Kevin Warsh should not do is lower the interest rates, because at the moment inflation is very high. Lowering interest rates and bringing more money into the economy will definitely increase prices and thereby basically increase the inflation. Inflation currently is at around 3.5% in the US, and the target is usually 2%. To lower inflation, we have to reduce the money supply. This means make access to money more difficult or more expensive, which means keep interest rates high. Okay, final thing for this video is that the US Treasury has just bought back $15 billion of their own debt. This is the largest buyback in history. Why is this important? Well, we know that the US is $39 trillion in debt. Buying back 15 billion is a small amount relative to the total. However, it is a good step forward. This money comes from, of course, taxes, mostly from taxes, and buying back their debt is a right step in the right direction. And with that being said, hope you guys enjoyed the video. Maybe you noticed I added a few different touches to the lighting and the camera setup. If you enjoyed it, let me know, and I see you guys tomorrow. Bye.